So for those who watched my video, I had mentioned that Thursday and Friday will be quite negative for the US stocks. And indeed, that's what you saw. The reason that the stocks fell today were manifold, but I had taken many factors into account and made my prediction. And this is what I do time to time when I give my predictions on a daily, weekly, monthly basis for the US markets, the Dow, S&P, Nasdaq. I take many factors into consideration. So today, the stocks have fallen on Wall Street as a mix of news related to tariffs and inflation have worried traders once again. The major benchmarks took a leg lower during the session after President Donald Trump said that he was planning reciprocal tariffs on trading partners. This could mean raising tariff levels across the board to equal rates charged to the United States. The Dow fell 444 points, or 1% almost, to close at 44,303. S&P 500 declined, or again 0.95% to 6,025. The Nasdaq slid 1.36% to end at 19,523. Nasdaq also had to contend with poor guidance coming in from Amazon. Amazon has guided some reduction in the earnings on account of unfavorable foreign exchange of foreign countries in which it is doing business. Donald Trump, during a meeting with a visiting Japanese Prime Minister Shigeru Ishiba, mentioned that he will be announcing next week reciprocal trade tariffs so that we are treated evenly with other countries. And he said he will lay out pretty simple. Stock market was already on edge before the Trump comments, as some earlier consumer sentiment and jobs data pointed to a pickup in inflation and spiked the 10-year Treasury yield above 4.5% at its session high. The consumer sentiment fell in February to 67.8, according to a preliminary reading of the University of Michigan's Consumer Sentiment Index. Economists polled by Dow Jones had expected 71.3. But perhaps more disconcerting was that the report's respondents anticipate that the one-year inflation rate could hit 4.3%, marking a rise of 100 basis points, or 1 percentage point from the previous month, and at its highest level since November 2023. That really hit the markets hard. Also released on Friday, we had the January's jobs report showing the unemployment rate fell to 4% from 4.1%, and that the average hourly earnings last month were higher than expected. Amazon, of course, as I just mentioned, lost 4% after guidance from the e-commerce giant disappointed investors. The company called for revenue growth of 5 to 9% in the first quarter, its weakest growth on record. The outlook overshadowed top and bottom line beats in the fourth quarter. Alphabet also continued to fall following somewhat disappointing results earlier in the week. To cap it up, as I mentioned, the last few days of the week will be fairly negative, and that's, you've seen it, focused on the negative side. And friends, that's how it has turned out to be. New concerns about inflation and Trump's new tariffs, including the reciprocal tariffs, which he's now started to talk about, have once again shattered the dreams of investors for a continued bull run in one direction. Friends, to get to know more where the US markets are headed, do join our Prime or Prime Plus Telegram groups, which are specifically addressed for the US markets. We give you forecasts on a daily basis, on weekly, monthly basis. And yes, you can join our groups by WhatsApping us on 9820861044. Alternatively, you can also email us at globalmoneyinvestor@gmail.com. Happy investing and have a great weekend. Take care. Bye-bye.